Hello, Jay Fagan here with the Mattox Group, coming to you with another Summer 2025 OB3 update. OB3, of course, One Big Beautiful Bill Act, or House Resolution 1, as it's formally called, the new tax legislation that was signed into effect on July 4th, 2025. In this update, we're going to be talking about tip deduction, the new deduction that has, I think, a measurably, objectively positive impact on our industry, our primary industry, here on the Central Coast of California. That is tourism. We have a number of folks in the tourist industry and service workers galore throughout the Central Coast. They are the largest employee group on the Monterey Peninsula. And I think objectively, as we look at OB3, this deduction has some pretty strong benefits for them. So let's hop right in. It is a $25,000 a year deduction, taken above the line, so it applies to standard filers or itemized filers, against your overall income for qualified tips. Up to $25,000 reduction taxable income isn't bad, considering for a single filer, the standard deduction is $15,750 for tax year 2025, and this stacks, so you get both. So in this case, the deduction has a few limitations, the most important of which is it must be a qualified tip, and it must be a qualified business. When this was negotiated, those of us in the accounting industry, not generally an industry that receives tipped income, but we and others like us were thinking very heavily about changing our model to begin accepting gratuities. Because if that was going to be income that wasn't going to be taxable, why not? Those tax lawyers in Congress knew what they were doing, and they specifically limited the qualifying businesses to those who pre-2025 generally received tipped income, and they put a caveat in the bill that the IRS has to come out with a list of qualified businesses within the next 90 days. And if you're a specified service, trade, or business, SSTB, under Section 199A, which lawyers and accountants and engineers and a lot of professional services are, you don't qualify to take the qualifying tipped income deduction. So even though I was really holding out for having a very affordable tax rate with a steep mandatory gratuity, the Congress knew what we were about, and they cut us off before we could begin. So mandatory gratuity, that's another kind of gremlin here in the language, particularly here on the Central Coast, where we have a lot of large parties, a heavy traffic area, big tourism industry, and we have large groups, generally 6 or more, probably every night in the restaurants downtown Monterey. And as is the custom out here, it's generally an 18% mandatory gratuity for parties of 6 or more. That may be different from state to state and from city to city here in California. That mandatory gratuity is not eligible for qualified tipped income deduction. In fact, the tips must be cash or card-based payments. They must be distributed either to the server or eligible taxpayer directly, or tip sharing arrangements are still eligible. However, it must be a voluntary payment made by the customer. It cannot be negotiated, and it must be determined solely at the customer's discretion. So for a number of the servers and wait staff and hospitality industry employees that we have, and other employees, and you think of beauty salons and barbershops and that kind of thing that typically receive tip income, the mandatory side of it is going to be a challenge. And it's also going to impact the reporting requirements, because now not only are the employers going to need to report the tipped income, they're going to have to carve out the non-mandatory portion of that tipped income. And that brings us to reporting. How are you going to get this on your tax return? Well, it's required to be reported through a W-2, a 1099, or Form 4137, a form that already exists for generally previously non-reported cash tips. Unfortunately, IRS has told us thus far that they do not anticipate changing the withholding tables for this deduction, nor do they anticipate changing the Form W-2 to report the tipped income in a easy to digest way. That's going to come in 2026. So we're not quite sure how that's going to shake out. I have a feeling that payroll companies are going to put it in box 14. That seems to be the objective guidance we're hearing thus far. We'll see how it shakes out. My recommendation to the taxpayer who's eligible for this deduction is document your tips. You should be doing it anyway, particularly if it's cash tips. But going forward for this tax year and the next 3, this is a very valuable deduction. We want to make sure you don't leave any money on the table. Speaking of, it's time limited. So tax year 25 through tax year 2028, January 1st, 2025 through December 31st, 2028. Those are the tax years at present under the law that are eligible for the tipped income deduction. The deduction, $25,000 maximum eligible deduction, phases out starting at $150,000 in adjusted gross income for standard filers, single filers and head of household filers, and phases out at $300,000 for married filing joint. Just like some of the other provisions in OB3, married filing joint, if you're married, you must file a joint return to qualify for this deduction. If you're married filing separately, you will not qualify for the deduction. So $150,000, $300,000 is where the deduction starts to phase out. It phases out at a rate of $100 for every $1,000 that exceeds the adjusted gross income thresholds. So total phase out, complete loss of deduction when you're at the $300,000 and the $550,000 total income. So that's a pretty broad spectrum, particularly when we think of the hospitality industry. Hard workers, absolutely vital and important people and much appreciated in my world. But generally not the highest earners across the board. We do have some here on the Central Coast that certainly are doing quite well. Again, it's a very high-end tourism industry. But I recognize that that's a lot of work. That's a very, very difficult job. And it's not necessarily rewarded at the highest levels of income. So the way this bill was designed with the adjusted gross income spread, a good chunk of taxpayers who are eligible are going to get some form of deduction. So what does that deduction look like in the real world? Effective tax rate versus marginal tax rate. I want to touch on that briefly as I describe the impacts here. You've probably heard of the marginal tax brackets, 10%, 12%, 22% for federal purposes. Here in California, we're a state with an income tax, a high income tax, I think one can objectively say, since it goes all the way up to 13.3%. But those brackets are 1, 2, 3, and so on. It is a progressive tax system, both at the federal level and the state level. So that means that for every one of those marginal tax brackets, there is a bucket of income depending on your filing status. And the amount of your income that is below the threshold of the bracket, so let's say for single filers, 0 to 11,000 is at 10%. And then over 11,000 up to the next threshold is at 12%. And then over that next threshold is at 22 and so forth. Only the amount of your income that falls within those respective buckets is taxed at that rate. However, when you see your income tax rate reported on many tax returns, particularly self-preparation tax software, they tend to point out your marginal tax rate, and they're pointing out the highest bracket a portion of your income fell into. So if a portion of your income fell into the 22% bracket, that's what they point out on the report. But that's not your actual effective income tax rate. Your effective income tax rate is the total tax you paid divided by the total income you received, and that tells you how many pennies on the dollar you gave to Uncle Sam or good old Cousin Newsom here in California. Crazy Cousin Newsom. He's a good guy. I know a lot of people don't agree with him, and I try to be objective about all things and not get into politics, but I think we can all agree that nobody particularly likes paying those checks. We do like some of the benefits that come from it, though. And so if we look at a single filer here on the Central Coast who's bringing in $65,000 a year, their effective income tax rate with no other credits or deductions would be approximately 9%, just under 9% for the federal level, and just a little over 2%, 2.36% for California. So combined 11.2. So that means for every dollar they brought in, they paid 11 cents, just over 11 cents, in income taxes to the combined federal and state. Now, if you're in a state that doesn't have income tax, you'd just be looking at the federal income tax. If we take the same person, $65,000, and $15,000 of that income is qualified tipped income, and they're in a qualified tipped business, so they get to claim it in full, their adjusted gross income is now reduced to $65,000, or from $65,000 to $50,000. And the net impact on their taxes, all else being equal, is going from 11.2% down to 7.11%, just over 7% there. Feds went from 9 to just under 6. The state went from 2 1/3 to just slightly over 1%. So it has a pretty profound impact on qualified taxpayers who can claim this deduction. And for that reason, I'm very pleased with this particular aspect of the bill. I don't particularly care for it being time limited, and certainly there are a few gremlins here to come with how it's reported and what's qualified, and are taxpayers going to get the full benefit. And I certainly want every taxpayer to get the maximum benefit of what they are entitled. But I think objectively, this is a deduction that was timely and well-intentioned for a vast swath of our nation who helps keep things running in this quality of life that we live. So again, up to $25,000 starts to phase out at $150,000 for single filers and $300,000 for married filers. Specified service trader businesses, accountants, lawyers, and the like are not eligible. Tips must be voluntary, must be in a business that pre-2025 received tipped income, and only applies presently for tax years 25 through 2028. We've got more to come later this year in the coming weeks and months as we unfold more and more of the details on OB3 and how it's going to impact our clients and those here in this beautiful area where we live and work. Don't ever hesitate to reach out with any questions. We're more than happy to talk through your specific numbers and see what the impacts of these deductions would be for you. Always love chatting with you. I hope you enjoyed the video. Look forward to more, and don't hesitate again to call us if we can be of service to you. Enjoy the rest of this beautiful summer. We'll be talking soon.